Hey folks, Vic Noble here, and the following video is just a little wrap up of our scalp trading results for the past week. Not a bad week, actually, definitely profitable. Now, listen, trade management is always going to be a factor, okay? But the trades this week that I actually posted for our members in advance had two break-even trades and then one that was a 3-to-1 reward risk potential. There were several other great trades that happened while I wasn't at my computer, like when I'm sleeping, that had total profit potential of well over 10-to-1 reward risk. And again, listen, that totally depends on how a trade is managed, and we all do it a bit differently. Okay, so I just want you to be, I'm just telling you what was available, just to be clear. Okay, obviously these small pit risk scalp trades can be very, very lucrative. So hope you like it, and if you do, if you could give it a thumbs up by hitting the like button, I'd really appreciate that. And as I mention every week, subscribe to our channel because both Darko and I post videos here fairly frequently, and if this kind of trading is appealing to you, and just be sure to subscribe and click that little bell so that you'll be notified whenever a new video gets posted. Alrighty, enough of that. Here were the scalp trades this week. Okay, so here are the trades. Keep in mind that we never ever take a trade unless we're at a daily and 4-hour support resistance level. Okay, that's foundational to our approach, and I won't bother showing you those levels in this video because, like in a lot of cases, what's happened is they've changed since the trades were done. So in the interest of time, I can just tell you that all of these trades were taken at key levels on the higher time frames. There's no faking it because I posted them all for our members ahead of time, not after the fact. Okay, so let's have a look. First of all, we had the New Zealand Swissy. Where is that? Right here. This one was on, let me just bring this up, 15-minute chart. This is our scalping time frame. It was on January the 19th. We bought this at 63.15. So let me just find it. I was right here. So this is what we call our pattern number 4 here. It's a Fibonacci based pattern. We ended up buying it right down here at 63.15 right here. And you can see what happened is it started to broke this swinger here. It never stopped us out, fortunately. And it broke this swing and it kept closing down here. And in the room, I told everyone, well, you know what? This is not behaving the way it is. I don't like seeing it making 2 or 3 closes below our entry level. And down to this area and breaking the swing and all that. That's kind of negative. So I just said, I'm going to be taking it off for break even. So, and I did. Well, look what happened. It went straight up. This is what I mean by hindsight trading. Somebody could say, oh, you should have just kept it. Look what happened. Well, that's just great. I mean, brilliant. But listen, we got to make real decisions in real time based on the price action that we see. All of this is hindsight. I wish we'd kept it. That's what we, we had to make that decision down there. And anyway, that's what happens. Anyway, there you go. Break even trade on that one. Next one was there was a head and shoulders pattern on the New Zealand US dollar pair. Let's bring that out here, New Zealand US dollar. And this was on, what date did I just say here? It was on the 21st. So, that was, let me bring us ahead here. Where is it? Ah, there it is right there. It was a beauty right here. This is a 15-minute head and shoulders sell setup at this level of resistance. This is still a valid level here. And we sold it up here at 60. I was filled at 72.18 we needed a 10 pip stop. That's the beauty of these scalps, these small stops. And then look at this move down here. I mean, that was so good. Actually, right down to this level here was hit right at the London close. Right in that London close time window, right in here. Pretty nice. I mean, gee, this is a pair that's been trending higher and higher. So when you get a 3-to-1 reward risk, which is what this was from here down to here, it was over 3-to-1 going into the London close here. That's a pretty good trade. You could go for this lower opposing level for sure, but you still, I mean, never, ever, ever let a move like this become a break-even trade or a loss. I mean, we would just never do that. We have very strict trade management protocols. What else do we have? On the CAD Swissy, we had another, let me see here, CAD Swissy. So this was on the 21st as well. Oh, that was right here. We hit this level of support in here, and we had another head and shoulders buy right here. And so what we bought it at 70.18. So right here, right about there. And we needed a 10 pip stop. Never got stopped out, but look at the price action. It's closing below where we got in quite a few times, right? And then this goes over for like over an hour and a half. And at the London close, it was all happening in here, and I just said, hey, you know what? I'm out of here. I'm taking a break even. So the members did. Some actually took a few pips profit. Then look what happened. Good thing we took it off. As contrast that with the one I just showed you before, where if we had kept it, it would have gone way up, and you would have made a bunch of money. Well, it's all hindsight. This needs to be made. A decision has to be made in real time, and it was sure a good one. So I mean, you never know what's going to happen, but have some rules and stick to them. Okay. There was additional trades while I was not at the computer, because I'm only here during the New York session. But if you look at the Swissy yen, here is a beauty that was picked up by one of our members. He saw this divergence trade setting up in here. He bought it right down here, and look at this move up. It was fantastic. So good. I just love seeing our members picking up trades. That was a beauty. Today, January the 22nd, as I'm recording this, on the New Zealand CAD, we had another pattern for sell right here. This was in the London session, and the sell was at 91.30. No kidding. The high was, I think the high was what, 30.9. So call it 31. And look at this move down. Just down to here on a Friday, that's the London close again. That's over 2.5 to 1. Reward rest. It actually got up as high as 3 to 1, and when it hit the figure down here. That's a really, really good trade, so that's the nice thing. Only needed a 10 pip risk. On the pound CAD, another member found this one, and it was this is actually divergence. The price is actually going higher in here. You can't tell. And then this huge drop. The sell was right here. Needed a 15 pip stop. And this again went down. It was a 2 to 1, more than a 2 to 1 when it got down to this level down here, which is the old level of support from here. And then it went back up against you. And you have to manage these trades properly. You cannot let this become any kind of a loss, or especially we're having small pip risk trades. I mean, you really want to manage these properly. Okay. So yeah, and we had lots and lots of orders in during this past week. Only a few of them got filled. I think there was like 15 or 16 orders in, but yeah, they don't all get filled because we are super patient and super picky. Okay, you have to be. Have a plan. Don't deviate. Okay, otherwise you don't have a plan. All right, and that's just not going to work. So what we do pays off, because we know ahead of time every single day exactly what we're looking for. So I hope that was helpful in showing you our approach to scalping. It's all about having a solid trading plan, having the patience, the focus, etc. to execute that plan, and then using impeccable, and I mean impeccable, trade management. Okay, I mean, trade management truly is the holy grail of trading. Okay, thanks for watching. Hit the like button, be sure to subscribe, and we'll see you all next week with more videos. Have a great weekend.